The venture capital industry operates on a structured hierarchy, with each role playing a crucial part in sourcing, evaluating, and managing investments. Moving up the ladder in a VC firm requires a combination of investment acumen, industry expertise, networking skills, and strong deal execution. Let's break down the typical career path in VC, from entry-level roles to the top decision makers. At the bottom of the hierarchy, we find analysts. This is typically the first step into the VC world, often for recent graduates or young professionals transitioning from banking, consulting, or startups. Analysts are the detectives of the firm responsible for scouting potential investments, conducting industry research, and analyzing market trends. Their work involves deep financial modeling, due diligence, and assisting with deal flow. They are often the first point of contact for founders looking to raise capital, reviewing pitch decks, and gathering data for partners to evaluate. However, analysts don't have decision-making power. They provide insights that help the firm's senior investors make investment choices. After a few years, promising analysts may be promoted to associate, or firms may hire associates externally from investment banking, consulting, or startup operating roles. Associates take on more responsibility, often leading initial meetings with startups, conducting deeper due diligence, and even beginning to build their own networks. Associates have more visibility within the firm, sometimes participating in investment committee discussions, but they still lack final say in investment decisions. Their role is to gather intelligence, structure deals, and assist in portfolio management. At this level, carried interest, the profit sharing from the fund's returns, is minimal or non-existent, and compensation is primarily based on salary and performance-based bonuses. After 3 to 5 years, associates who show strong deal sourcing abilities and a deep understanding of market dynamics may be promoted to investment manager or senior associate. This is where things start to get more strategic. At this level, individuals lead investment processes, manage relationships with portfolio companies, and may even start influencing deal terms. They attend board meetings, help startups navigate challenges, and begin shaping the firm's investment thesis. While they still don't have the final say on deals, they are trusted to bring compelling opportunities to the table and push them through internal approval processes. The principal role is where VC professionals start taking a leadership position within the firm. Principals drive investment strategy, source high-profile deals, and manage portfolios more actively. They often have sector expertise, meaning they are sought out for their insights in industries like fintech, AI, or health tech. At this stage, principals are groomed to become future partners. They may sit on startup boards, negotiate deal terms, and have more influence over investment decisions, though final authority still rests with partners and general partners. Compensation for principals includes higher carried interest, reflecting their growing stake in the firm's success. The partner title is where decision-making power becomes real. Partners have a significant say in which startups receive funding, how capital is deployed, and how the fund is structured. They work closely with general partners to fundraise from limited partners, expand the firm's network, and build its reputation in the industry. Partners also mentor junior team members, cultivate relationships with top founders, and represent the firm at major industry events. Compensation at this level includes a substantial portion of carried interest, aligning their personal financial success with the performance of the fund. At the top of the hierarchy is the general partner. GPs are the owners and senior-most decision-makers of a VC firm. They lead fundraising efforts, make final investment decisions, and take responsibility for the overall success or failure of the fund. GPs are often the face of the firm, building relationships with top-tier LPs, industry leaders, and high-profile entrepreneurs. They have the largest share of carried interest, often 20% or more of the fund's profits, and earn the highest compensation, but they also bear the greatest risk. If a VC fund underperforms, GPs may struggle to raise new capital and maintain their firm's reputation. The 2022 Venture Capital Compensation Benchmark provides a clear overview of how salaries and bonuses vary across the industry, depending on factors such as the size of the firm, geographic location, and fund performance. While there is significant variation, a general pattern can be observed across different roles within venture capital firms. At the entry level, Analysts typically earn between €45,000 and €55,000 per year. They often receive bonuses in the range of 20 to 30% of their base salary, although they usually do not participate in carried interest at this stage of their careers. Associates, who take on more responsibility in deal sourcing and due diligence, see salaries ranging from €60,000 to €90,000. Their bonus structures are similar to those of analysts, but they may also receive small portions of carried interest, typically between 0.5 and 1.5%, offering them a first opportunity to share in the fund's long-term profits. Investment managers and principals, who play a more central role in decision-making and portfolio management, earn between €100,000 and €150,000 annually. Their carried interest allocations are more substantial, usually ranging from 3 to 7%, reflecting their increasing influence on the fund's performance. Partners in venture capital firms see their compensation start at around €180,000 and often significantly higher, depending on the firm's success and size. Their carried interest shares usually fall between 10 and 15%, creating strong incentives aligned with the fund's overall outcomes. At the top of the structure, general partners command the highest salaries, typically ranging from €280,000 to €350,000 or more. In addition to their salaries, they receive carried interest of 20% or higher. Their personal wealth is therefore closely tied to the long-term success of the fund, reinforcing the importance of strategic leadership and high-performing investments. To summarize, the path from analyst to general partner is competitive and demanding, requiring not only financial expertise, but also strong deal-making skills, industry connections, and the ability to spot transformative startups before anyone else does. For those who make it to the top, the rewards are immense, not just in financial terms, but also in influence, access, and the ability to shape the future of innovation. Venture capital is not just about money, it's about backing bold ideas, taking calculated risks, and being part of the next wave of groundbreaking companies. And for those who rise through the ranks, it's a career that offers both intellectual challenge and the potential for extraordinary success.